what off God. Okay, I think we have already finished everything with respect to the step acquisition. So now we can move on to disposal. So of course, like I mentioned before, disposal, if you know very well, the adjustments with respect to the step acquisition, which means the increases in the shareholding, then when you have disposal of investment, it's just going terbalik, reverse. Because step acquisition, you increase, so you go this way. Then if you have decreases, you just go backwards, okay? So in other words, you're going to dispose of your investments in the investee companies. So we can just move on from here. So understand and apply the consolidation techniques for disposal. So which means that sometimes in a particular question, especially in the final examination, you may have to work with two companies, let's say two subsidiaries or two entities besides the holdings. Then what happens? One of it, you will have increases. Another company, you will have decreases. Okay, and then you are expected to do all the necessary workings. So that could be one of those scenarios. All right. Then, of course, you're supposed to state the disclosure requirements when the subsidiary is disposed of. That one, we will cover it probably in the next class with respect to non-current asset held for sale and disposal and discontinued operation. Specific emphasis will be on disposal group. Okay, so this is disposal of interest in the investee. So you can see by the side here that we have all these possible scenarios. So we have a full disposal. Full disposal means what? Originally, you may have some control in the investee company. So subsequently, you dispose of. And when you dispose of in full, basically that at the end of the day, your percentage of interest in the other company is kosong. So which means not part of the group anymore. Okay, so that one is the scenario number A. So you can see from here, 80% you dispose of become kosong. So this is a full disposal scenario. So which means if you have 80% initially, then when you dispose of, you become zero. Can you see that it crosses the 50% boundary? Okay, so in other words, you have to calculate the gain or loss on the disposal. At the same time, because it is a partially owned subsidiary, all your NCI, everything will also have to be eliminated off, because if you are already zero percentage of shareholding in the investee company, it shouldn't be reflected at the consolidated financial statement at the end of the day. So which means no consolidation, no NCI, no goodwill as well. Everything will have to be eliminated. Okay, then you have other scenarios like B, C, and D, whereby we have partial disposal. Okay, partial disposal such that originally you are a subsidiary. After the disposal, you become just a status of the associate. And also see that you cross the 50% boundary here. Okay, so in other words, you do the same. But at the end of the day, there will be a certain time frame that you need to do the consolidation, because let's say the disposal is partway through the year. The first few months that your status is as a subsidiary, you need to do consolidation. And then the status at year end will be the status that you're going to reflect when you prepare your consol SOFP. So which means that you will have one item called investment in the associate. Okay, then the next one is probably you may have a subsidiary. After the disposal, you become just a pure investment. Okay, so you also do almost the same like the others, but it's just that at the end of the day, in the consol SOFP at the end of the year, there is just a pure investment. So this pure investment, you account it for under a financial asset. This will be taken under MFRS 9. Then you may have scenario D, yeah? Associate to investment. This one we are not really that much concerned, but you still need to know how to do it. Okay, so basically becoming an associate becomes simple investment. And the last one over here, we are going to say that it remains as a subsidiary. So same with your step acquisition. When you remain as a subsidiary, so which means that let's say you are 80%. After the disposal already, your interest becomes 70%. So which means that a subsidiary after the disposal is still a subsidiary. So which means you just do a transfer between the owners. All right, you adjust it through the equity. So we are going to look at all these scenarios. And then there is some pro forma that you need to remember as well. Okay, so if you remember the pro forma, then the rest of it should be quite easy for you. Okay? So these are the disposals that we were talking about. If you dispose of already, you still have control. So subsidiary to a subsidiary, control is retained. So which means that you still consolidate, but it's just that you have to make some adjustments to the NCI. So which means NCI attributable to, profits attributable to the NCI, you will have to take into account which portion the NCI is 30%, which portion the NCI is 40%. Okay, then the rest of it, not much of a difference, you still consolidate. This one is a full disposal. So which means that from a sub to become 0. So this one, it crosses the 50% boundary, so you be careful. Subsidiary to associate, you also cross the 50% boundary. Okay, all these are basically you crosses the 50% boundary. So originally a subsidiary, after the disposal, you become an associate. Originally a subsidiary, after the disposal, you become just a pure investment, holding 10% interest in the investee company. This particular slide, you actually have seen it when you look at step acquisition. Okay, when you look at step acquisition, you also have this particular slide. Basically, this slide tells you what you're supposed to do when you prepare the console SOPL, what you're supposed to do when you prepare the console SOFP. Okay, so always remember, pro rata is only applicable to the console SOPL. Pro rata means what? If you pro rata your revenue, okay, let's say you have holdings, you have subsidiary, this is your console. Okay, let's say for example, subsidiary status only for 6 months into the year. So holdings figure, let's say X1. Subsidiaries figure, let's say X2. Okay, you of this figure, you must only take 6 months out of 12 months to go to the console. Is that understood? Okay, so do not do the same for the console SOFP. If you do the same for the console SOFP, that means you're going to pro rata, and all the figures in the console SOFP will be wrong. All right. Some of the marking scheme in the midterm, I just need you to add across only, add across, and then you will get like probably half a mark. Okay. So if you add across also wrong, that means whatever that requires adjustment will also be wrong somehow. Okay, because that one is the basic principles of consolidation. This particular pro rata, not pro rata, this one you study it when you do your CR. Okay, so again, we emphasize again, console SOPL, when you prepare console SOPL, you look at the status of the investee during the year. So it could be like partway through the year, it could be the whole year. If it's the whole year, you just add across. If it's partway through the year, first 6 months a subsidiary, after the disposal, they become an associate. So associate is equity accounted. So you don't take the whole thing, but you just need to pro rata accordingly. So the status. If you end up first 6 months a subsidiary, it's the same. So if first 6 months subsidiary, last 6 months also subsidiary, what do you do? Just add across. Okay. The only difference is in the profits attributable to the NCI. So you just have to be careful on that part. Okay. Then the status at year end will determine what should get recorded in the console SOFP. Okay, so later you will see that sometimes we want to do a shortcut with respect to NCI at console SOFP. Okay, so let's say your status is originally you have 90%. Then after the disposal, you become 80%. So, which means what? After the disposal, which means at year end, this is the status. So, which means that at year end, your NCI is 20%. So if you want to do a shortcut to get what is the NCI figure at year end, you must base it on year end percentage. Okay, that is based on the 20%. Okay, later you will see some scenarios like this when you run through the tutorials or whatsoever. Okay, so status at year end will determine how to treat those investees. Okay, did I mention or not? Dispose 20% shareholding, dispose 20% of the shareholding. And did I mention that in the last class? Yes, Okay. So you should be well aware of that, because once you get that wrong, that means all your computation will be haywire lah. Okay, but sometimes I also have to be a bit careful. Sometimes when I extract the questions, I've forgotten about this. So you have also got to be careful. So consolidation issues, there will be change in the relationship between the investor and the investee. Maybe originally a subsidiary, after the disposal, your relationship becomes as an associate only, or just as a pure investment, or after the disposal already, still in holding and subsidiary relationship. Okay, treatment of goodwill on consolidation attributable to the shares disposed of. So what do you do? If you dispose of partially, what do you do with the goodwill? All right, do you have to maintain it in the books, or do you have to eliminate it altogether? Okay, determination of the gain or loss on disposal from the viewpoint of the investor and of the group. So you will see that later in your class illustration that I uploaded yesterday, you will also find that we sometimes require you to calculate gain or loss on disposal from the investor's views. Investor means whatever figure that will appear in the books of the holdings. Okay, from the group, this one you look at the pro forma. Okay, pro forma in the notes. Okay, pro forma. So where you can find that, okay, if you really do not understand, you just need to make sure you know the pro forma well. Make sure you read whether the question requires the NCI to be measured at fair value or NCI measured at proportion of the net worth in the subsidiary. Then you choose which pro forma you're supposed to use, and most likely is that you will get the correct answer. Okay, so this one is the patterns of ownership that we have talked about. So subsidiary to zero, subsidiary to a subsidiary. This one is just a transfer between the owners. Okay, so that's why they tell you you consolidate as normal. The only thing is that when you want to calculate the profits attributable to the NCI at the console SOPL, you have to pro rata in accordance to the status. First, let's say first 3 months, right? -3 means it's 9 months. Okay, so last 9 months, 9 out of 12. What is your status? Because remember, 90% subsidiary, which means NCI is 10%. 60% subsidiary, NCI is 40%. So they tell you, if let's say for the first 3 months out of the year, your status is 90-10. Then for the last 9 months, your status is 60-40. So when you want to attribute the profit at time at the console SOPL, you have to break it into 2 time frames. Okay? Then of course, since the status did not change, you just consolidate for the whole year. Just H plus S. Okay? Then in the console SOFP, also H plus S. But remember, when you want to compute the NCI that time, what did they say? Consolidate as normal with closing NCI based on year-end holding. So if you do a shortcut or whatsoever to compute to your NCI, you have to base it on 40% in this case, not the 10%, yeah? Okay, then this one, subsidiary to become an associate. Of course, you also pro rata accordingly. All the figures of the subsidiary, you only take, let's say, the first 4 months. All right, the last 8 months. So consolidate only the first 4 months. Okay, pro rata results of the subsidiary up to the date of disposal, and then thereafter equity account. So which means if you can visualize your console SOPL, you take what? H plus with S times by 4 out of 12, let's say for revenue. Then somewhere down the line, you should have share of profits from the associate. Agree or not? Then at the end of the day, you will also go and do the pro rata with respect to the profits attributable to the NCI. Okay? But at the year end, all right, at the year end, the status is now just as an associate. So which means you wouldn't see investment in subsidiary at the console, but you will see investment in associate. Okay, no NCI, nothing already. Okay. This one again is the same things that what we have looked at. So of course, sometimes you cannot just assume, let's say if this is after the disposal already, this is 25%. Okay, sometimes you cannot assume that it is automatically an associate. Okay, sometimes they will give you additional information, says that, oh, even though they have 25%, they are not able to exert significant influence. At that point in time, you must treat it just as a pure investment, unless stated additional information. If not, you just use the normal more than equals to 20, less than 50 for the status as an associate. Okay, so this particular slide is the same as what we have mentioned so far. Okay, so now this one is where we say 80% to 0. So that means originally you were a subsidiary. After the second disposal, after the second, or we won't say second, because you're disposing it first time. After the disposal, you become not related to the group. Okay, so which means what? You cross the 50% boundary. That is where you need to calculate the gain or loss on disposal. Okay, then in the console SOPL, you just need to consolidate up to the date of disposal. Okay, After that, it's not related to the group already, so you can't add across anymore. Then in the console SOFP, because console SOFP, your concern is with regards to the status at year end. So you will find that in the console SOFP, you are not related to the group anymore. So which means no need to do any consolidation. Of course, if the holding company has other subsidiary, they will still do the consolidation. But with respect to this, that their interest in the investee has already been fully disposed of, you just ignore the sub. Then no NCI, because at the end of the year, there is no status as a subsidiary. All right, so no subsidiary, no NCI law, no goodwill as well. Okay, so with respect to sometimes if there is goodwill measured in full, goodwill measured partially, everything will have to be eliminated. So you can look at illustration 1. But actually, before you look at illustration 1, let me just fast forward to how you calculate the gain or loss on disposal. You go back few slides, okay? Sorry, not back, forward few slides, and then you will see this one. Maybe I should just put a comparison. I don't know whether I gave you this or not. No, but you have the 2 slides. This is for explanation. So you can see this. Because the 2 slides before, I have one that says partial goodwill and then another one that says full goodwill. So it's the same. What I did was just crop it for easy explanation. So you will see that you put them side by side so that you can know what is the difference. So like I mentioned, when you want to calculate the goodwill, the gain or loss on disposal, you must take note how the goodwill was being recorded in the books. Okay, how the goodwill was recorded in the books. So whether the books have captured the partial goodwill or the full goodwill. Okay, so if you look at the computation, you will find that the only difference is where you put the NCI. Where you put the NCI. Okay, if you look at gain or loss on disposal, of course you need to have the proceeds. So if you dispose of 20% of your holdings in the other company, how much do you get? So this and this is the same. You have the consideration received, which means it's your proceeds from your disposal. Okay, and let's say if you do not dispose of fully, so there must be some investments that you are still holding. Okay, when you still hold those investments, let's say for example, if you are 90%, after the disposal already, you become let's say 50. Don't say 50. Let's say 40%. Okay, so which means from a start to become the status of an associate. So which means you cross the 50% boundary, So when you cross the 50% boundary, this is when you are going to compute gain or loss on disposal. So remember, if your status is a subsidiary, after the disposal already, you are still a subsidiary, you do not use this particular template. Understand? You do not use this template. Why? Because the explanation is that since the control is retained, so in substance, there is no disposal. Okay, so you just make an adjustment between the owners, that's all. So this particular template only applies if you cross the 50% boundary. So you need to calculate gain or loss on disposal. All right, proceeds, let's say the investment retained in this case is 40%. Okay, so you're supposed to do what? It's just like the step acquisition. So this one is like if you dispose of everything and then you buy back the 40%. Okay, so in other words, the investments that you retain must be remeasured at fair value. This is the same, remeasured at fair value. So both are the same. So now we just go and look at the partial goodwill first. So partial goodwill means what? You only capture the goodwill portion that belongs to the parent. Okay? So which means NCI is measured based on what? Proportion of the net worth at the date of acquisition. Okay? So in other words, you are going to find out, compare how much you have, because this one will be what? The proceeds that you receive because you sold off the 50%. Agree or not? You sell off the 50%. At first you have 90 You sell off the 50, now you got 40. So 50% at the market value now, which means already at fair value. Then fair value of the investment retained. You don't care how much is the cost, but you have to use the current share price. But if that is not given, you do the pro rata from the first line. Let's say 50% you sold, you get 100,000. 40%, if you sell it now, how much would be the fair value? Okay, so you do a pro rata if the share price is not given to you. If share price given to you, just use the share price to compute how much is the fair value of the investment retained. This one, this particular figure, net asset at the date control is lost, usually you can calculate. All right, of course, in the pro forma here, I just put in one figure. So you have to calculate how much is the net worth, let's say, of the subsidiary at the date when control is lost. Let's say year end is 31st December. Okay, so partway through, let's say on, when do you do the disposal? On 31st March. So, which means that share of consolidated carrying amount at the date control is lost. So that means, what is the net worth on 31st March? So everything you calculate as at 31st March. Okay, so which means that you will probably have the OSC. You just look at your net worth. Okay, net worth basically is what? If you take your current asset, equities and liabilities, your net worth basically is what? Current asset minus the, total assets minus the total liabilities. Or the net worth is actually equal to the shareholders' equity. So which means OSC, RE, and then maybe you have OCE, stuff like those. Okay, so you compute the status up to the date the control is lost, which means up to 31st March. Okay, you will get this figure. Then NCI, also you will compute up to 31st March, up to the date the control is lost. Okay, because you see, you are only having the proceeds of 90%. So which means you must also remove the portion that belongs to NCI. I mean, when you want to find out gain or loss, right, you have to compare like with like, because on top here, you are taking 90%. Of course, the net worth here, you must also take 90% only. So you remove how much the NCI is appearing at 31st March. Okay, thereafter, because you see the status has now changed, subsidiary to become an associate. And remember that associates goodwill, we don't reflect at the console SOFP. Agree or not? We only reflect the goodwill that we obtain from our investment in the subsidiary. So which means any goodwill that remains in the books that is unimpaired, that means still remaining in the books, we have to also knock it off. Okay, so total, you campur tolak over here, you put the bracket on the other side, you campur tolak, you're going to get a gain or loss on disposal. Okay, so basically you just push everything to one side. All these three figures, you will get one subtotal. Compare with the 90%, that means this will be the 90% thereof already. You will get how much is the gain or loss on disposal. Okay, then you can now look at the other side. If you are looking at the other side, which means that this is the same, this is the same. The only difference is where you put the NCI. So you see over here, NCI is together with the net worth. But in the full goodwill, NCI is above all those that says fair value, fair value, fair value one. Okay? So you have to put down here because NCI was measured at fair value. So you cannot dump it together with those that is not at fair value. Because all these figures over here, they are all at the book value, not revalued to fair value. But because you measure the NCI at fair value, so your NCI is already stated at fair value. So you need to calculate and then you put it together with all those that is fair value, fair value, fair value one. Understand? So you will have some figures here. Okay, campur all the three, which means what? You have the 50% here that you dispose of. You have the 40% that you retain. You have the 10%, which is the NCI that you measure at fair value. 50, 40, 10, that means it's 100. So therefore, your carrying amount of the net worth in the subsidiary at the date the control is lost, as at 31st March, you can take 100%. Here, just now you minus the 10%, right? So that means you're taking only 90%. So 90% compared with 90%, then it's okay, no? You get a gain or loss. Here, you take 50, 40, 10, 100%. So over here, you must take 100% too. Okay? How much is the net worth? How much is the goodwill that remain unimpaired, that remains in the books? Everything has to be eliminated. So you compare and see, you will get the group gain or loss on disposal. Okay? And this group gain or loss on disposal will go to your console SOPL. So let us see this asterisk, because here I don't have the asterisk. The asterisk, you have this, right? Partial, you have this. So let's look at what is this asterisk. So just now we say, if we dispose it off on 31st March, okay, 31st March, our year end is 31st December. So which means NCI, you always know that you have two portions, right? One is the portion that is pre, another portion that is the post. The pre figure, usually you get it from the computation of the goodwill. Okay, when you compute the goodwill, you will have NCI, XX figure. So that one is NCI at fair value at the date of acquisition. Then, if you acquire during the year, in the first 3 months, so which means the NCI will also have some claim on the post-acquisition profit. Okay? So you take the percentage before the disposal, and then should there be any other reserves, like for example OCE, you also need to take your share post-acquisition. Campur everything together, that will give you the figure here. Okay? So you just need to memorize two pro forma. Can I? So with this, we can go and look at one first, illustration one, because I think it's better for us to run through the so-called accounting treatment explanation, then we look at illustration one. Okay, but if I follow the sequence of the slides, then when I go to illustration one, you haven't looked at the two pro forma. Okay, so you can just fast forward a little bit, look at illustration one. Okay, so illustration one is where you have a full disposal. Full disposal such that you have no more connection to the holding company. Okay, So have a quick look at this particular simplified kind of SOFP, SOPL. Okay, because I try to squeeze everything in for easy explanation. So I would not suggest you to print the notes in 6-in-1, 8-in-1, 10-in-1, you know. Actually, you see nothing, okay? All right, so you just look at the SOFP. H means is the holding company, S is the subsidiary. So you are given OSC, retained earnings that was brought forward from the previous period, and then the profit for the year. So it's a very simplified one. Then you have net assets, and then you have investment in the subsidiary. So when you see the investment in the subsidiary, basically, that's my cursor. Basically, you will find that this particular figure is your cost of investment. I hope that by now you know how to read the financial statements. So under the column of the holding, if you have this investment in sub, basically 120,000 here, 120,000 is your cost of investment. Okay? Then of course, this particular cost of investment will never appear in the console SOFP. So maybe I should put a note at the marking scheme for your midterm. Should the student put investment in the subsidiary at the console SOFP, deduct 20 marks. Alright, deduct 20 marks. Oh, question 1, you also didn't ask me how many marks. You are so kind. Maybe I tell you it's so easy, then you don't really bother. Question 1 is 40 marks. Question 2 got part A, part B is 10 marks. So the whole paper is 50 marks. Okay? Alright, so which means what? It's super easy your midterm. But I'm sure you don't believe me. So if I say deduct 20 marks, that means we are being very serious. This is some, I wouldn't say error. This is something that should not happen at the final year student. Otherwise, we send you back down. Okay? But actually, we don't have the right. If we have the right to do that, I think I will send many down. Okay? Not up. We do disposal. Okay? But anyway, should not see investment in the subsidiary at the console SOFP. Okay? And of course, this one is just to tell you the numbers of ordinary shares. Numbers of ordinary shares. This is one of the disadvantage of being aging process. We can't see much. On the spectacle, I can't see. I take out the spectacle, I can see the slide, but I can't see you. Oh, you are blur to me. Okay? My friend say, why don't you go and do a bifocal? Bifocal is super expensive, and sometimes we are not used to it, we may fall. At my age, we shouldn't fall. Once you fall, out you go. Understand? So you will see that, what is this lecturer taking the spectacle, can't find, actually cannot see. I haven't reached the stage whereby I don't use the spectacle, also can't read. You know, last time they used to have those reload cards that you need to go and scrap out the number, the silver coating, then you get the number. Now I can't even see, you know. Last time I used to laugh at my husband. This one also you cannot see. Now that thing I also cannot see. Okay? If I want to see, I must make sure it's like that. Very hot. Then only I can see. Bright, man. Then you see like that. Don't know 5 or 8. That one is very difficult. Okay? Something like that. So I'm sure you will know one day. Okay? So SOPL for the year ended 31st December X9. So you have all these, revenue, expenses, PBT, tax, PAT. So all these are. Additional information, they tell you you acquire 80% of the shares in S on the first day of Jan X7. So you know X7, X8, X9. So no matter how, you must always go and take note first. So this is 3 years. Sometimes you don't make use of the info, but it's good for you to make it a habit. Okay? When the reserves of S were 20,000. So in other words, they were telling you that, oh, the reserves that is pre-acquisition is 20,000. So they tell you what? H dispose of all of its shares. So it's 100%. From 80, when you dispose of, it becomes kosong. On what date? First day of July X9. So first day of July X9 means what? The status as a subsidiary is only 6 months out of 12 months. Okay? Status as a subsidiary is only for a period of 6 out of 12. So, in other words, later it becomes kosong, right? So you cross the 50% boundary. So you must tell yourself what is the status. First 6 months, you are the subsidiary. After the full disposal, you become not connected to the group. So in other words, you cross the 50% boundary, you need to calculate gain or loss on disposal. And when you tell yourself like this, now you must also go and look for how the NCI was measured. Because you need to choose between the pro forma on the right or on the left, right? So this one is a full goodwill, okay? And when they give you the fair value of the NCI on the first day of Jan X7, that means this is the one at the pre-acquisition. Because this is the date of acquisition, okay? They dispose of on this date for 200,000. So 200,000 is your proceed. So if you recall your pro forma, first line you already got already. And then they tell you they have not yet recorded it in the books of the holdings. And then the item number 3, they tell you what? Goodwill on consolidation remain unimpaired. So which means you must able to quickly calculate your goodwill already. So goodwill calculation, you must be very good. Otherwise, if you calculate it wrongly, then the rest of the thing no need to do lah, also wrong already lah. Okay? So if you just look at this, no need to calculate, you just know cost of investment is this. NCI given to you is this. How much is the net worth at the date of acquisition? 100,000 plus with how much that is the pre-acquisition RE. So you campur tolak, you are going to get how much is the goodwill. Okay? Then the goodwill remains unimpaired, but you know that the goodwill will also have to be eliminated because at the end of the day, you are no longer connected with the group. Okay? This is the one that just now I just blah, blah, blah. This is your goodwill computation. Take the cost of investment, NCI at fair value, which is given to you. OSC is always pre. This is your pre-acquisition RE. So you campur tolak, you get 25.5. Okay? And the two pro forma, you have to choose the one that says full goodwill. Why? Because the question says NCI is measured at fair value. Understand? So determine what is the status, determine whether or not you need to use this pro forma, and determine which one you need to use, the one on the right or the one on the left. Okay? And then you know that this one, full goodwill applies. So what was the first line? How much is the proceeds from the disposal of the 80% interest in the investee? The question have given to you 200,000. Okay? So you plug the figure, put it on the first line. And this one, fair value, of course, pro forma means is the standard format. Sometimes certain figures not applicable one, like in this case. Fair value of the investment retained. Would you have any figures here? You wouldn't have, because you fully dispose of everything. So this figure will be kosong, new. Okay? So, because remember just now, if you use the full goodwill pro forma, all the fair value will be all grouped together on top, including the NCI figure. Okay? We will come back to here. The computation is at the bottom. Then, net asset at the date control is lost. Okay? When was it lost? On 31st, what date? 1st July, sorry. Our friend might come only now. Very jam outside? Sure not. Where you travel from? Where? Very far from here? You don't compare far with me. You know where I travel from or not? I travel from the Zoo Negara, come here, okay? Zoo Negara. Don't get me to tell you what time I leave my house. If I have 8 o'clock class, you know what time I leave my house? 5:45 a.m. 5:45 a.m. I leave my house because I don't drive. I take the MRT, LRT, MRT feeder bus for 10 over 20 years, maybe 15 years. Okay, I've been doing that. Okay, no, I also cannot, when I recall back, I also don't know how I did it. But before that, I was working in Subang from my home also. That one also 5:30, I leave my house. Wow. Because at that time, I need to walk to the LRT. Okay? And then, that time, I take the LRT, go until Kelana Jaya, change the feeder bus to go to Subang. I forgot what. You know, that is where the tailors are, Inti, that place. Then after that, I discovered that the feeder bus is not reliable. So what I do is, I take the LRT to go to Asia Jaya station, I walk to the Hilton that side, take the feeder bus, take the public bus, go to work. That was 7 years. Okay, because I worked there 7 years. I worked here for almost 20 years. Okay, so I don't want to change. So next time, don't tell me, Puchong, you will be late. Okay, late don't come. Otherwise, I jump your muka. Okay? Never mind, it's okay. Late also come. Attendance is very important to you, right? Otherwise, you kena bar, I got more things to do. Okay, please make sure you scan. Go to where to scan? Go to Teams. Okay, go to Teams to scan. Attendance, I don't care one. Okay, come back to here. You see, when you come in, you distract me. Then I cherita. After that, I cannot finish. Okay, this goodwill, unimpaired, you have to bring it to be offsetted. Why? Because you are not related to the investor anymore after the disposal. Then, net asset at the date control is lost. So remember, just now, we know this 100 and we know this 40. Where we get this 140 from? This is the 100, this is the 40. Okay? But we cannot use 150. Why? Because 150 is the status as at 31st December X9. But we don't have the status until the year end. Our status chopped off 6 months into the year. So which means this is still part of my net asset. This is still part of my net asset. But this particular profit for the year, I need to split because the last 6 months is none of my concern. Okay, so you have to take 6 out of 12. So you have to campur tolak a little bit, then you will get how much is the retained earnings at the date of disposal. What was the date of disposal? First day of July. Okay, so you campur these two, you're going to get 145. You campur tolak, then you get how much is the group gain or loss on disposal. And in this case, you have a gain. Okay, so now we want to look at the NCI. Okay, the NCI figure was 30.5. So remember, NCI we break into two components, right? NCI at the date of acquisition, NCI share of the post-acquisition. So 25.5 was the figure that you get from here because it is at the date of acquisition. Then post-acquisition, which means what? Once you work out this figure already, that means this is the retained earnings at the date control is lost. So you will take the 45 minus what? What is this 20? 20 is actually the pre-acquisition because we want to calculate how much is the post-acquisition RE. Your share still remains at 20, not kosong, still remains at 20 because at the date the control is lost, you still have 20%. Okay, so you will get 30.5. You campur tolak, you're going to get a figure. Okay, then we will move on, which means that you can prepare your console SOPL. Console SOFP, okay, SOFP is actually all of the holdings figures only, okay, because the subsidiary, nothing already. So you will find that here, all the figures of the subsidiary, you have to times 6 out 12 times 6 out 12 times 6 out 12. And then where do you get this particular figure? Gain on disposal. This particular 60, you are going to bring it to the console SOPL. Okay, this one is the column for the console SOPL. This is the column for the entity financial statement. Entity, that means the holdings own books. This one is the console. So the console, we are going to take this console one. This is the group gain. All right, at the console level. This is the one that I say entity level. Sometimes we may require you to calculate. So it just says what? In the books of the holdings, you can see the investment in subsidiary. The cost of it is 120,000. How much do you sell it for? 200,000. So which means you sold something that you bought for 120 for 200. So that means you make a gain. That particular gain is in the books of the holding. So if the question requires you to calculate how much is the gain or loss on disposal from the viewpoint of the parent company's own books, and at the you will have this particular computation. This slide is at the group level. And this particular simple calculation here is at the entity level. Okay, but of course you don't really need to bother whether you campur this together or not. Usually we will ask you to calculate it separately. Okay, so you can see what else. The other thing will be the profit for the year. Of course, you need to only take for 6 months and 20% belongs to the NCI up to the date of control is lost or up to the date of disposal. So you campur tolak, you will get this. So take note of this in the console SOPL, all the figures of the subsidiary you must pro rata accordingly. Okay, as in this particular case, 6 months only, your status remains as a sub. Okay, Yana? Then we will move back to this one, illustration 1, done. So we look at illustration 2. So illustration 2 is that you didn't dispose of everything until kosong. You dispose of until you're left with something. So this is what we call partial disposal. So the status is subsidiary, then later it becomes just pure investment because it is only 10%. So investor may dispose of most of his holdings but retain less than 20% because more than 20 we will say associate, okay, which does not give it any control, does not give it any significant influence over the investee. So which means in substance you cross the 50% boundary. When you cross the 50% boundary, it is considered as sold, okay, but then later on you buy back the 10%. So deconsolidate the sub. No need to include as part of the subsidiary. No goodwill, no NCI, no consolidation because it is just a pure investment. And you need to recognize group gain or loss on disposal. How do you know when you're supposed to calculate gain or loss on disposal? When you cross the 50% boundary. Whether you go in terms of step acquisition or disposal, you also need to calculate. Then, whatever investment that you so-called buy back, which is the 10% over here, you must always remeasure. Okay, remeasure to the today's value, which is at fair value. So which means in the console SOPL, OCI, if your subsidiary status, let's say, is 4 months out of the 12 months, you have to pro rata. All the figures of the sub, when you take it, you have to times 4 out of 12, 4 out of 12, 4 out of 12, all the way. Then, because you cross the 50% boundary, you're supposed to show the group gain or loss on disposal. All right? And then show the fair value changes thereafter. Okay? Then for the console SOFP, you have to remeasure whatever investment that is retained, which is like in this case 10% at the fair value. And then you just show it as a pure investment in line with MFRS 9. Okay? So we go to illustration 2. Okay, illustration 2. Let's say we have a situation of a subsidiary, then it becomes just a pure investment. Okay, so you dispose of how many percent? 90%. So, first day of January. Other the details, but they just tell you, first day of January, you acquire 100% of the shares for 800,000. So this is your cost of investment. When the fair value of the net asset was 700,000. So which means this one, you can safely calculate how much is your goodwill already, right? Because cost of investment, no NCI, because this is 100% acquired by you. Compare with the fair value of the net asset, you're going to get the goodwill of 100. 100,000. Okay, then when do you dispose of? First day of July X3. So, of course, we take the understanding that the year end is 31st December one. Okay, so partway through the year, you dispose of 90%. And how much do you get when you dispose of? 1.2 million. So this is the proceed. And on that day, the fair value of the net asset was 1 million. So this figure is given to you. Okay, so of course we know that we crossed the 50% boundary. So we need to calculate gain or loss on disposal. So which pro forma we need to choose? We have to go and look at how the NCI was measured. So they tell you NCI was measured as a proportion of the fair value of the net asset in the subsidiary. So that means you have to use the partial goodwill format. Partial goodwill. So the shares that remain had a fair value of 140,000. So this is the fair value of the investment retained. Then as at 1st July, X3, this is what? The date that you dispose of the 90% interest in the investee. 60,000 goodwill on consolidation was impaired and written off. So that means you calculated your goodwill 100,000, isn't it? Then impairment loss was 60. So which means unimpaired goodwill will be 40 only. So they tell you they account for the investment at cost. Then, which means what? Now you have to, of course, this particular note is just trying to tell you that what is happening, what should be the accounting treatment. Of course, there has been a change in a relationship from a subsidiary to become a pure investment. Why? Because you dispose of 90%. You cross the 50% boundary. Your control is lost. Okay? Which means that any remaining goodwill will be written off. Okay? So usually the key thing is something like this. If you lose control, all the remaining goodwill must be written off already. So control is very important for you to determine whether it is still there or not there. Okay? And then the 10%, because it is only so little, right? Not able to exercise significant influence, that is your pure investment. So you have to account for it in line with MFRS 9. Okay? So you look at the computation of the goodwill. So of course the goodwill computation is very simple, Niman, because this one is 100% wholly owned subsidiary. So when you calculate, you get 100. The question has informed you that 60,000 has been impaired up to the date of the disposal. So which means the goodwill that remain unimpaired is your 40. Okay, got that? I left blank all. All blank. Sendiri buat lah. Okay, based on the question, you do by yourself. Just isi tempat kosong ni, right? So remember to choose the correct pro forma. Use the one that says partial goodwill. Okay? Use the one that says partial goodwill. Because for this one, most of the figures are already given to you. So first of all, you do the one at the console. You do the one at the console. Okay? When you dispose of the 90%, 1.2 million was your proceed. Okay, so you just copy balik. Then the question also tells you that after the disposal, you still got 10%. So the 10% at fair value is 140,000. So you just take this, 140. This one, I presume that you know how to calculate already, right? Goodwill. This one, if today you still don't know how to calculate, what should I say? I wish you all the best. Okay? Very sarcastic, huh? When I wish you all the best means I see you again next trimester. Huh? I see you again next trimester. Okay? There is some, there's always some prerequisite for you to know when you have already passed the previous prerequisite paper. If this one also you don't know, I say I wish you all the best. Okay? So if you don't know, what you need to do is know it before. Midterm is too late already. Know it before the final. Okay? You don't want to know, Just don't take the final exam. Okay, because you will know what is the results already. Okay, then this figure is also given to you. This 1 million, okay. 1 million, they already tell you. How much was the net asset on the date of disposal? 1 million. So this is given to you. You just plug it here. $10 accordingly, you're going to get a gain on disposal. Okay, this is from the console point of view. From the holdings entity point of view, of course, they receive the proceed is also 1.2 million, right? Compare with the carrying amount. Last time, when they bought the 100% from you, that time the cost of investment was 800,000. So now you dispose of 90% of it. So the proportionate cost was only 720. So you compare, you're going to get a gain on disposal. So remember, because this is the one that appears in the books of the holdings, you do not need to actually reflect them at the console. Okay? So at the console will be 300 will be taken into account in the console SOPL. Okay? Then we go back to look at illustration 3. 1, 2, 3. Okay, illustration number 3. This is originally a subsidiary. After you dispose of 40%, you become 40%. Okay, so there is two ways to come with the same effect, 80 to 40. The question can say, they dispose of 40% shareholding in the investee. Dispose of 40% shareholding in the investee. Or the question may say, dispose of 50% of its shareholding in the investee. But they all arrive at the same status. 80% to become 40%. Understand? The first one just say, you have 80, you just dispose of 40. The second one says, you have 80, you dispose of half of what you have. So you have to take the 50% times by your 80%, which means it's 40%. Understand? Okay? So you must know how the question is worded. So an investee may dispose of most of his holdings, but retain more than 20%, so that it gives them significant influence. Okay? So you have an associate status. So associate, what is the accounting treatment? Do you consolidate? You also don't, right? You just equity account. So which means the status, let's say the first 3 months as a subsidiary, you deconsolidate. So which means what? Goodwill also got to be eliminated. NCI also has to be eliminated. You do not need to include it in the console. Okay, for the portion whereby your status has become an associate. Then, of course, you cross the 50% boundary, then you will realize that you need to calculate the gain or loss on disposal. Okay, whatever investments in the associate that still remains, you have to measure it at fair value. So you see, every time we look at the scenario, the same story repeat again and again and again and again. Okay, so in the console SOPL, what do you do? First 3 months as a subsidiary, you consolidate. Last 9 months as an associate, you equity account. Okay, you put in your gain or loss on disposal, you put in the investment in a share of profits from the associate, all right, and in the console SOFP, you remeasure the investment, make sure that they are retained at fair value, equity account. Okay, so we look at illustration number 3. Okay, for illustration number 3, so you can see what is the date of acquisition. You can see what is the date of acquisition, first day of January X1. 100% of the shares for 1.2 million. So 1.2 million is your cost of investment. Okay, what did I leave blank this time? Got did I leave anything blank? Where? The ones in blue. Oh. Oh, you can fill it up. Okay, give you time to go and fill it up. That's why we record, right? So if you miss it, later you switch on, then you see what time now. Agak, how many minutes into the recording? Okay. Do you know or not, when you listen to the recording, you can fast forward one. You can use the speed of 2 times. That's the max. I hope they have 5 times. Finish already. All right. Because sometimes I listen back to the recording, why I talk so soft, so slow one. So I usually, if I listen back, I times 2. Finish already. All right. Because sometimes certain things you don't want to listen again. Let's say if I talk about my traveling journey, I speak 5 times more. Okay? So that's the best part about recording. But I don't know how many of you go back and look at the recording one. Do you or do you not? Sometimes we must make mistake. I pull out this thing. No suara. Okay? That was what happened I think last trimester. Or last. Okay? I didn't know that they didn't connect this wire, because this is the mic. Okay, it is supposed to serve as a mic. Then what the student has is a recording, tapi tak ada suara. Okay, so you can just fill in or just listen, and then you would know what's the answer already. Okay, so cost of investment 1.2 million when the fair value was 1 million. So this is also a very simple illustration, whereby from the first line, you can straight away calculate how much is your goodwill already. Cost of investment, 1.2. Don't have NCI because this is 100% wholly owned subsidiary. Fair value of the net asset at the date of acquisition, 1 million. So goodwill is 200,000. Okay, then what did they tell you? On the first day of April X3, so of course we assume that year end is 31st December. GLE disposed of 60% of its shares in S. So, of course, because this is 100%, it makes no difference. Whether you read it correctly, you read it not correctly, also no difference. Only when it is less than that, then only it makes a difference. I think you can see that in your tutorial question later. So in this case, you dispose of 60% of its shares in S. So it's the same as minus 60. So you get 40. Okay. Then what was the proceed? 1.8 million. And then the question gave you how much was the fair value of the remaining shares on that day. So in other words, this 40% fair value is actually 1.05 million. Net assets of S on that date were 2.2 million. So this is given. But usually you will require to calculate. So later in our class illustration one, you will be expected to calculate. And then they tell you 20% of the goodwill on consolidation was impaired and written off. So 20% of your 200. That is your impairment loss. So they ask you to discuss the accounting treatment. So if you still need to copy those that is in blue, next time I must put down what is it that I erase off. Okay, and then for this particular illustration, did they mention whether the NCI was measured at fair value or NCI was it based on proportion of the net worth? The question didn't say. Okay, but usually for simplicity, if the question didn't say, and the question also didn't give you much of the information on the share price, usually the safest one is to assume that it is measured at proportion of the net worth. Okay, so partial goodwill lah. So what was the situation now? After the disposal, the subsidiary will become an associate. So which means the shares retained must be remeasured at fair value. Accounting treatment, because here control is lost. When control is lost, goodwill will have to be written off. Okay? The gain or loss on disposal will be taken to console SOPL. You need to calculate. Investee is treated as though the investment was sold and bought back at fair value on the date it became an associate. So this is like what we have mentioned earlier when we did the step acquisition. So the reverse, if you have a disposal, is also the same. It is like a virtual, as if. That's why we put there the sold is in inverted commas, bought back also is in inverted commas. But actually that does not happen now. All right, but to make you understand how it became captured at fair value, this is the explanation. Okay, so what do we have? I think by now you should realize that I actually like to put all the information in this manner. Not that you can use, not that you have to use it, but I will find that it's easier for discussion. Okay, of course you have your own method of doing, just use whichever that you like, because normally this particular kind of tabulation, no marks will be given, but it is good to tell you or to make you understand, oh, this is what's happening now. Okay, so 100% acquired on this date. How much was the cost of investment? How much was the fair value of the net asset? Whatever information given to you, you just plug it inside here. So because this is 100%, so which means when you want to calculate goodwill, is at the date you first obtain control. So since you have control, your status is as a subsidiary. Then this is the date that disposal occurs. On this particular date, first day of April 20X3, you dispose of 60%. So which means 100 minus 60, the remaining percentage is 40%. 40%, your status is as an associate. And of course, all these figures you just plug in now, because if it's given, plug in. Not given, later you probably need to calculate. Then, once you see that you do not have control, then you have to specifically mention that control is lost. When control is lost, means what? Your goodwill will have to be written off. Then you see again, it crosses the 50% boundary, which means what? You have to calculate the gain or loss on disposal. Okay? This is a simple calculation of the goodwill. This is the goodwill that you computed before the impairment, and this is the unimpaired goodwill. Unimpaired. Okay? Unimpaired goodwill that will need to be written off. Goodwill unimpaired. Okay, then the same things we just bring here. This is the same tabulation. So of course you need to calculate gain or loss on disposal, right? And this time we split it into two. This is at company level. The bottom one is at company level. Company, that means at the holding entity financial statement. Okay, so how much was the proceed from the disposal? 1.8 million. How much was the original cost of investment? right? Original cost of investment was 1.2, but you dispose of 60%. So 1.2, 60% thereof. So 720. So in this case, you will get a gain on disposal. Okay? Then coming back to here, because the question didn't tell you how NCI was measured, because in this case, they don't tell also is okay because there is no NCI element. The reason is because it was 100% acquired. Okay, so we will just choose the one that says partial goodwill one. Okay, of course you use the other one also can, it makes no difference. So we just choose the one that is partial. So the first line, how much is the proceed from the disposal? You get it from here. How much was the fair value of the investments retained? This one, fair value of the investment retained were given to you 1.05 million. Okay, 1050,000. Net asset at the date control is lost is also given to you. Okay, this is 2.2 million. All right. NCI at the date control is lost. Of course, this one don't have lah because it's kosong ma. NCI is 0 because it was a wholly owned subsidiary. Goodwill unimpaired, you get it from the previous computation. This figure, 160,000. So you campur tolak, you're going to get a gain on disposal. Okay? Let's check now. That means we finished all the 1, 2, 3 already, right? 3 different scenarios. This one we finish, huh? Now we can look at what? The scenario whereby after the disposal, control is still retained. Okay? Control is still retained, which means what? Your status as a subsidiary did not change, although the percentage of your shareholding decreases, which means that the percentage of the NCI holding increases. Okay? Because they are both the owners. So the first bullet point says what? There is no change in relationship. Originally parent sub, after the disposal, your status is still as a parent sub. So in other words, you sell away some of your shareholding. So in other words, you dispose of your shareholdings to whom? To the NCI. Okay? So which means that occurs when there is a decrease in shareholding of the parent, also known as, wrong already, huh? Should be increase in NCI. Betul tak? You sell away to the NCI because the shareholding decreases, that means NCI increase. Okay. Can you just update? Increase. Okay, because the parents' shareholding decreases, because it must be opposite. Parents' holding decrease, that means increase in the NCI. Okay, so you just update this. I think I must have copied from the acquisition, step acquisition. So accounting boundary not crossed. If accounting boundary not crossed, you don't have to calculate gain or loss on the disposal. So in substance, they tell you there has been no disposal. So no disposal means no gain or loss on disposal will be recognized. This will be treated as a transaction between the owners. Just like in your step acquisition. When you have a subsidiary status, after the second acquisition, you're still a sub, control is retained. No need to calculate gain or loss on disposal. We just make a transfer between the owners. So Since the status as a subsidiary has not changed, no change, which means that we just consolidate for the whole period. Even though the first 6 months you are having 90%, second 6 months you are having only 80%. You're still a sub, you just consolidate for the full period. The only thing that you need to apportion will be when you attribute the profits to the NCI. How many percent? 10% for the first 6 months, 20% for the last 6 months. Okay? In the console SOFP, you console as if this is a subsidiary throughout, which is true lah. Okay? And when you calculate the NCI, just remember that NCI must be based on the percentage at year end. So at year end, your NCI has gone up. Then, since we say that you have to make an adjustment between the owners of the that means between the parent and the NCI, you have to make an adjustment to the equity. So you look at illustration 4. Just have a quick look. So this one you have the year end as 30th November X1. Okay? So which means this is the first date, which is 1st December X0 to 30th November X1, 1 whole year only. In that 1 whole year, what happens? At first, Hamster acquired 80%. How much was the acquisition? For a cash consideration of 800 million. So this is your cost of investment. Okay, so they acquire 80% of the 600 million numbers of ordinary shares for 800 million. 800 million is the cost of investment, and because of the acquisition, you have control. At that date, the fair value of the NCI in stream was 190 million. So this is the NCI at acquisition. Hamster wishes to measure NCI at fair value. That means this is a full goodwill at the date of acquisition. Then on 1st December, the retained earnings in stream were 300 million and the OCI were 10 million. So this is what? On the first day of December. So which means 300 million is RE, that is pre. OCE at the date of acquisition, OCE or OCI, should be OCE. At the date of acquisition, that means this is OCE, that is pre. So which means in this particular case, the question didn't really give you the net worth at the date of acquisition. So you just need to calculate a little bit. Then they tell you the fair value of stream's net asset were equivalent. Okay, these are no problem. On 30th November, this is happening when? First day of the financial year, last day of the financial year. Okay, Hamster sold 5% of the shareholding in stream. So 5% shareholding. I shouldn't say of. Hamster sold a 5% shareholding. That means just minus 5. If I say 5% of its shareholding, you have to take 80% times by 5%. Okay, which is different figure. So how much was the proceed? 60 million. But retain control. So control is still maintained. On 30th November, stream had, this is the what? RE at year end. RE at year end. Then the OCE at year end was 30. This is OCE at year end. So, explain with appropriate workings how the following figures in relation to shrimp should be calculated for inclusion in the console SOFP of hamster as at 30th November 20X1. Computation of the NCI, computation of the adjustment to the equity. Okay, this is a transfer between the owners. So, of course, you can see the movement, the table. The table usually, like I say, for me, I think it's quite useful. For you, if you can, you adopt. If you cannot, you have your own way of drawing out what is happening for the whole period is also okay. Because I like this because this one, if it's a disposal, I just put a minus. If it's an acquisition, I just put a plus. Okay? Then your status is 80% to 75%. A subsidiary is still a subsidiary. A subsidiary is still a subsidiary. Okay? So all the figures already given to you, blah, 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 all those. So what was the story? Hamster disposed of 5% holding in shrimp. Okay? So which means originally they own 80%. Then they dispose of 5. So now they are 75%. So which means the NCI percentage now has gone up from 20% to 25%. So resulting in NCI at year end of 25%. NCI are allocated their 20% share of the retained earnings and the OCE up to the date of the disposal. Okay, understand? So whatever that the proportion between the holding and the NCI will still maintain up to the date of disposal. Okay, so 80-20, up to the date of disposal. Then NCI is then adjusted as a result of the 5% increase on 30th November 20X1, which means that NCI at year end will now be 25%. Okay, so accounting boundary not crossed, so no gain or loss on disposal. And then you have to make some adjustment just between the owners. So any increase or decrease between the adjustment, any balancing figure will be taken to the equity. So you have this. Okay, you still remember this, the one with A. Still remember, just as in the step acquisition, we also need to calculate A, because when you need to calculate the A figure, we are looking at adjustment between the owners, just as a transaction between the owners. So NCI calculation, what we need is to get the figure of A. This one we already done it when we look at step acquisition. So in other words, how much is the NCI at acquisition? So originally you are 80%. NCI at that point in time is 20%. So NCI at the date of acquisition was given to you 190. Okay, so you take this 190. Then NCI share of the post-acquisition reserves. Okay, so in this case, in the question, just now you can see from here that you have two elements of the reserves. One is the retained earnings, another one is your retained earnings, another is your OCE. So you have the pre-component, you have the post components over here. So This is the pre, this is the post with respect to the RE. Okay? This 10 million is the pre-OCE. This is the year-end OCE. So, which means the difference between these two will be the post-acquisition OCE. So, you take all the post, which means that at year-end minus the pre. At year-end minus the pre. At this point in time, NCI percentage is still at the original 20%. Still 20%. 20%. Okay, so you take a 20% there off, you will arrive at 34. So when you arrive at 34, what does it mean? As at today, just before the disposal, the total value that belongs to NCI, when NCI is 20%, it's 224. Okay, so that means when I have 20%, now you're looking from the perspective of the NCI. When the NCI is 20%, the value is 224. But now the NCI will increase. Okay, because the holding disposed of to me, so in other words, I take the proportion. How much is the increase? 5%. So how much should be the value of the 5% increase in NCI? So you take the proportion now. This 224 is your A figure. So 224 divided by 50 times by 5. You are going to get 56. So you trample together, this will be your NCI at year end. And this NCI, you're going to bring it to the console SOFP. So this same value that you make an adjustment between the owners will be taken to the tabulation to calculate whether you have a gain or a loss when you do this so-called adjustment between the owners. The 60 over here was given. You can look at this schedule as well. The proceeds when you dispose of the 5%. So this will be your 60. Compare, you're going to get a gain on this particular transfers between the owners. So cash 60 million, NCI 56, and this will be your balancing figure 4. Okay? I think this is the last already. Okay. So I hope you get a good idea what is happening, hopefully. Okay, so you can take a break. You like to listen to my voice in the recording. A very not nice one, no, not. Alright, you also like to listen. I also don't like. Okay, some lecturers have very nice voice when they come out in recording one. So those I also like to listen. Last time we have one speaker from Crow, one of the partner. Oh, a guy, one of the partner. Lang Zai or not, don't know lah, because it was online one. But I think quite good looking also lah. But no, you only need to listen to his voice. Oh my God, the voice is so super nice. Right? He has this accent. He's from, I think he studied in, don't know, UK or what one. Then he worked overseas in Australia, blah, blah, blah. Wow, the way he speak. Okay, I hope to get him someday to come back here to speak. So I'm not going to listen to his content, I just listen to his voice only. Okay, very nice. Okay, so you know, every one of your lecturer also got their own weakness one. Okay, this is my weakness. Okay, all right, come back. So this is a scenario on decreases in shareholding. So this particular question, I've already put it at the Teams. Okay, so you can go and see from the Teams there, the question. Wow, some of you so fast one, printed already? From where? Actually, this morning, I was thinking that I want to print out the question, and not the question, maybe the pro forma of the answers. But then, this morning, I arrived at the campus at about 7:50, but the printer refused to print. All right, the printer cannot print until about 8:38. Then only it start to print. Then I got no time already because got so many of you. Okay, so never mind. We just look at the soft copy. So, you have one company that is called Humberto. Okay, H lah. All the fantastic names. Who are the other one? One is called Sebastian, another is Sherry. So we just want the first alphabet. Okay, we just want the first alphabet. So you have the first day of January. Actually, of course, because I still don't know how to do the screen share. All right, you have this in the pro forma. Okay, so you can start to fill in, fill. For you to do the exercise, maybe you can do it later. Okay, but this is the pro forma that when you read the question, you can fill in, read the question, you can fill in the pro forma. Is that okay? All right, so we just look from here. Okay, so you look at the question. So what happens over here? This is the first day of January 2023. So of course, before that, we have to we have to go and look at the requirement of the question first. First one, calculate goodwill arising from the acquisition in Sebastian in Sherry. So goodwill computation is a must know. You must know your goodwill computation. And goodwill computation, usually, the first time you achieve control, if it's a simple one, usually you need your knowledge from your CR. Okay, so this is the date of acquisition. And you also need to know what is the date of the consolidation, which is 31st December 2023. So which means you acquire the interest in Sebastian only 1 year, full 1 year. 80% was the acquisition, and you acquire it for 150 million. So this is your cost of investment. When the retained earnings and the other components of equity was 15 million and the 5 million. So all these are your pre. Okay, your pre-RE, pre-OCE. At the date of acquisition, fair value of the net assets was 140 million. So, which means that they give you the what? Fair value of the net asset. Fair value of the net asset was 140. So always be careful a little bit. When the question gives you what is the fair value of the net assets, they also give you this, that. That means they expect you to do a reconciliation. Okay? And then they tell you any excess thereof must be due to an increase in the depreciable land. Non-depreciable land. So that means there is some fair value adjustment upwards with respect to land. Okay? Okay, so of course this is Sebastian, right? OSC 100,000. Let's say we forget about the 000, 100,000. Actually it's 100 million, okay, 100 million. Then other components that is in the fair value of the net asset will be your 15 million, your 5 million, okay? And then of course, because you only acquire 80%, you must have your NCI, isn't it? What did the question say? It is the policy of the group to value NCI at fair value. So fair value. Okay, NCI is measured at fair value. And then because NCI is measured at fair value, the question also must tell you at the date of acquisition in Sebastian, how much was the share price? Okay, in this case, they gave you the share price at the date of acquisition, 150. So that will assist you to calculate your NCI at fair value. Okay, and then this is, we will look at it later. This is the disposal. Okay, Humberto sold 50% of its interest. So you have how many percent? 80. Half of what you own, you dispose of. So that means the status of here must be what? Originally 80%, then you dispose of 40%, you left behind with 40% only. Understand? And when did that take place? 1st October 2023. So which means for the first 9 months, your status is as a subsidiary. For the last 3 months, your status is as an associate. Okay, got that? So maybe I can just show you, not this, the one with the answer. Okay, so this is with regards to the first acquisition that we have seen. So this one, you just copy balik, just fill in the blanks, fill in the blanks, fill in the blanks. Okay, so the thing that you need to take note is the status. First 9 months is a sub. Last 3 months is an associate. So what is happening over here? Do you cross the 50% boundary? Yes. So when you cross the 50% boundary, what happens? You must calculate the gain or loss on disposal. And this one, the question has already asked you, already informed you, NCI is measured at fair value. So which means you have to choose the pro forma that says full goodwill. Understand? So all this is nothing new. You just copy balik from the question and then just put in. Of course, you would calculate this fair value of fair value adjustment with respect to the item of land. Okay, because remember, OSC is actually 100 million. 100 plus 15 plus 5 is 120 compared to 140. So this is actually the balancing figure. Fair value adjustment for the land. This one given, just put it there lah. Understand? You got that? See, remember just now we say, because all the pre-figures given to you, all the pre-figures 15, 5, and then your OSC is always pre. You campur tolak, it doesn't come to 140. So which means the balancing figure will be your fair value adjustment upwards with respect to the item of land. So, like I say, up to this point, it's not talking about ACR. It's talking about CR. Okay? So we look at this. This one here. Now we want to look at the next one. This is, of course, there is a disposal line, which we are going to look at later. Now we look at Sherry. Sherry is the second company. So in terms of Sherry, it was acquired on 1st July 2023. So that means partway through the year. So be careful. Year end was 31st December 2023. But you acquire the interest in Sherry 90%. So that means it's your subsidiary, right? But you didn't acquire it for the full year, unlike Sebastian. So for Sherry, you acquire it only 6 months into the year. So 6 months into the year, you must remember this. Of course, you don't go and put times 6 out of 12. Why? Because this is SOFP. SOFP, do not pro rata. You pro rata, half this lah. Okay? Don't pro rata. So you must know your principles very well. Principles, chichai bochai, you also give me the simple answer or wrong one. Then, of course, this is how much that is the retained earnings pre, OCE pre. Okay, because it was all stated at the date of acquisition. And then the next one. The purchase consideration comprises of what? Share exchange. Of what? 1 share in Humberto for every 2 shares held in Sherry. So you acquire 90% of the shares in Sherry. So which means you have to go and look at the ordinary share cap in Sherry. How many numbers of ordinary shares? For simplicity, usually the same figure for the ordinary share cap value will be the same figure for the numbers of ordinary shares. Okay, so no need to go and confuse the students so much. So, which means how many shares you acquire? 90% of how many shares in Sherry? Shares in Sherry is 200 million. 200 million. Okay, so that's the numbers of shares. So when you times with this, that means what? 180 million numbers of shares. Okay, and then what did they tell you? Every 2 shares. So which means 180 divided by 2. Every 2 shares in Sherry they are going to give you one of the holding company shares. And each one of the holding company shares is worth how much? This is Humberto's shares, the holding company shares. So you must go and find. The first one is the holding company shares. The second figure is the subsidiary's share price. Okay, so you have to times by 3. Okay, so you just jump lah. Then, of course, in this case, they tell you this transaction has not been recorded in the books of the holdings because, you see, Sebastian only has. You didn't record yet the investment in Sherry. Okay, so this 150 was the 150 mentioned in para number 1. This is for the first company. Okay, so now, of course, this is actually your cost of investment now. Then they tell you, on the first day of July, which is the date of acquisition, everything approximate the same as the fair value, except a piece of property. So you have one property. Property had a fair value of 6 million in excess. So which means you have a fair value adjustment upwards for property. How much? 6 million. Okay, and this will create additional depreciation of 1.5 million in the post-acquisition period to 31st December 2023. So which means from the first day of July 2023 to 31st December 2023, the additional depreciation because of the fair value adjustment, the question do not require you to calculate. They just tell you, oh, we tell you the figure. It is 1.5 million. This is the additional depreciation. And of course, this additional depreciation is a post-acquisition adjustment. We do not take it into account in the computation of the goodwill. Okay? So based on this, actually, based on this, plus with additional, plus with the item number 2 here, you should be able to calculate the goodwill. Okay? NCI measured at fair value. In the investments in Sherry, the goodwill will be impaired by 20%. Okay? Profits and losses are deemed to accrue evenly throughout the year. Okay, so now you go and do the computation of the goodwill. This is good for you, when you do your, take it as a revision towards your midterm. Pro forma, I also gave you already. Just fill in, and then we will check. Just give you a few minutes only lah. Okay, computation of the goodwill in the investment in Sebastian, in the investment in Sherry. All the figures are given to you. You basically plug put, that's all. This is something like what will be required of you in the midterm. So for purposes of midterm, class illustration is important. Lecture notes, of course, is the basic. Class illustration is something that will change depending on the midterm, depending on the final examination, because the lecture notes will be the same. Calculate your goodwill in the investment in Sebastian, and then in the investment in Sherry. Any one of you want me to share the so-called no, everything is at the Teams actually. All right. I don't know how you come to campus, huh? All of you have at least got a phone, right? So the phone you can see the question. The only thing I use is to show only. I know, but I don't really know how to use it. Very comfortable. Yeah, I know, because it has a pen also. It's easier. No need to write with the mouse. Very nice. Okay, computation of the goodwill, you shouldn't have much of an issue. Can you tell me how much is the goodwill in the investment in Sebastian? What is this figure? 40 million, because got the 000 here. 1, 2, 3. What about of course, this one we already know, the first 9 months, the status is as a subsidiary. The last 3 months, the status is as an associate. So control is lost. You have to calculate gain or loss on disposal. Goodwill will be eliminated as well. Investment in Sherry. You are going to end up having goodwill before the impairment, 67,000. That means it's 67 million. Then after the impairment of 20%, this will be 53,600. Okay, and bear in mind that because the NCI has been measured at fair value, should you be required to so-called prepare the console SOFP, console SOPEL, then remember the impairment has to be shared. Okay? So now I show you the one with the answer. This one show you first. You don't know, you just go back to the recording. I hope I've recorded. Then this one is your investment in Sebastian, investment in Sherry. Okay, all the figures are given to you. Just plug in the figure. That's all. Nothing to do with ACR yet. Okay, can we move on? Can I? Now we go back to the question. So that is the first part of the question. And then they tell you, calculate the gain or loss on disposal of holdings interest in Sebastian. See, for the parent company, for the group. So that means entity financial statements of the parent and the consolidated financial statement. Okay, so you have to go and calculate gain or loss on disposal, which means what? Which pro forma you're supposed to use? You use the pro forma that says full goodwill. Don't know which one is the answer. Okay. So you can see something like this. So we look at the books of the parent first. Okay, books of the parent. So which means what is happening? Books of the parents. So proceeds from the disposal. Of course, you can go and look at the question, right? How much was the proceeds? You sold off on the first day of October 50% of whatever you own for how much? 150 million. Okay, 150 million, and then they tell you the proceeds were recorded in the suspense accounts. So you have this particular suspense accounts. That was the reason for the 150 million. Okay, so you take that particular figure and put here. All right. Then how much was the original cost of investment? That means the first time you acquire the 80% that time. Original cost of investment in Sebastian was 150,000. Okay, 150 million. And then they tell you, you dispose of 50% of what you own. So which means 50% times by the original cost of investment the first time you bought it at time. So you will get 75. So at the end of the day, this is a gain on disposal. All right. Then gain or loss on the deemed disposal or virtual disposal because it's actually not really selling off and buying back, right? So you choose the one that says full goodwill pro forma. Because remember, we have one that is partial, we have one that is full. Choose the one that is full so that your NCI appears on top. First line we know, second line we know, right? First line is how much was the proceed. This proceed is the same as this proceed. Okay? Then fair value of the remaining shares. Because in this particular question, they have given to you the share price. They have given to you this particular share price, 220. All right? When you dispose of the 40%. So use this to do a remeasurement to fair value for those remaining shares. You have 40 million left, $2.20. So that should give you 88 million. W1, we hold on first. Okay, we look at those that is easy ones. So carrying amount at the date of disposal, what is the net asset at the date control is lost. Okay, so you have what? Ordinary share cap. And because it was acquisition during the year, right? So you need to pro rata the you need to prorata your year's profits. Let me see. Okay, so you see the profits. Where is the question? The profits. Because the thing is, I cut off some of the info. So now let me see whether I cut correctly or not. What happens in the books of Sebastian? Okay, so what you have in the books of Sebastian, the retained earnings was 79. Out of the 79, the pre was how much? Pre was 15. 15 million. Okay, so which means the post must be the difference between these two. So the post is the balance. So this minus this, you have 64. All right, but this 64 million is for the whole year. So which means you only pro rata up to the date of disposal is up to 1st October. So that means you need to take only 9 months out of 12 months. So in other words, how much will be your retained earnings at the date the control is lost? 15 million plus with 64 million times by 9 out of 12, okay, which is stated here. $15 million plus this, you get your 63. Then other reserves, you also do the same. Okay, in your OCE, you have 5 million from the pre-acquisition. 5 million is from the pre-acquisition, which is on the date that you acquire the interest in the sub. And then 20 million is the post-acquisition, which means you take 25 minus the 5. This is the post-acquisition period, and you only have a share up to the date of disposal, which is 9 months only. So, Champotola, you're going to get this 20 million. Fair value adjustment was computed earlier when you compute the goodwill. So you have to bring down this particular figure as well. Okay? And since you already calculated the goodwill, and since the control is lost, this unimpaired goodwill must be eliminated when you calculate the gain or loss on disposal. So you bring the 40 million over here. Okay, just follow the pro forma. So now we want to calculate how much is the fair value of the NCI up to the date of disposal. So we have two components. First component is NCI at the date of acquisition. So this particular 30 million, we can always go back and look at the goodwill computation, this 30. Okay, let's say we put here number 1. So this is from the above, number 1. Okay, then remember in terms of reserves, we have two components. One is the RE, another one is the OCE. You take all the post-acquisition for 9 months, your share. You are who? You are NCI. Okay? You are talking about yourself, NCI, 20%, 20%, 20%. Okay? So just take all the post-acquisition, then your share. So the post-acquisition, basically this figure, This one, the 63 and the 20 is actually the 63 and the 20. Okay, but you just need to remove the pre-acquisition. Okay, this one is after you minus this, you will get the post-acquisition. You just take your share. Okay, so you get all these figures. So once you get that, what's going to happen? You're going to bring this 42,600 and put into the tabulation. So now you can see the whole thing. You have the proceed, the remaining interest as an associate remeasured to fair value, the fair value of the NCI up to the date of disposal. So you have campur everything over here. Then this is just the computation of the net worth, okay, including the unimpaired goodwill that now you need to dispose of. So your gain on the disposal of this particular subsidiary, 37,600. Do you get that? Then we look at what is the last part. Of course, this one is just for show only, telling you that URP on the intra-company, you must know how to do lah. Okay, so this one is very simple. Sherry sold goods to Humberto. So Humberto is here, Sherry is here. Sherry sold to Humberto. How much is the intra-company sales? 30 million. And then they tell you it was sold at markup of 20. 1/4 of this goods remains unsold. So the URP would be how much? 1/4. So this one is just to tell you that when you have URP calculation, you must get it right lah. Times by 30 million times by markup given to you 20 upon 120. This adjustment you must know at fingertips. Okay, if I meet you at the lift somewhere, hey, how to calculate URP? You must be able to tell me. Okay, no need to near the exam only remember. All right. So this one, okay. The last, this one we finished. We look at the last one. Because remember, the investment in Sebastian at the end of the year would be having a status as an associate. So they ask you to calculate the investment in the associate. You still have to calculate. Why? Because Sebastian become an associate not at the year end. It was still having another, how many months towards the year end? Another 3 more months. 1st October 2023. So October, November, December, you still have to calculate how much is the share of the post-acquisition in Sebastian, okay, as an associate status. So this one. This 88, where do you get from? From the top. This 88. Okay, where do you get it from? Fair value of the remaining shares. Okay, fair value of the remaining shares. Fair value of the remaining shares. So you get it from here. Okay, and then remember in the post-acquisition period, that means after Sebastian becomes an associate, there is still 3 more months to go. So in the 3 months status as an associate, you also have a share of the post-acquisition RE, of the post-acquisition OCE. So you take your share, 40% is your share, but only with respect to the last 3 months. So you campur tolak, you are going to get this particular figure, and this figure should appear in the console SOFP. You got that? Because the goodwill computation is just put down for you so that you remember how to calculate the URP, yeah? Okay? So, okay? This is on the illustration on the disposal. Any questions? Maybe I should save this, and then put it in the Teams,
When we do the double entry, we need to bracket the explanation location.
Can because we'll try to avoid having the same figures, so we would roughly know. What's so blur one? Because I enlarge. Yeah. Oh, why so blur? I know, but it's very blur. Don't know why. Your side there is blur now. No. You can see lah. And okay, for those students who haven't scanned your QR code for attendance, the QR code is available at the MS Teams. Okay, just now the file for the answers, I've already loaded it to the MS Teams, so you can go and check it out later. But try not to share it with the students of L2, because they are also going to go through. Okay, thank you. See you next week.